Yeah, a lot of people ask me, what is the difference between term life and whole life? Well, life insurance is real broadly broken into two categories. Term life, which is temporary, and permanent life, which can last your entire life. You can think of term life as renting coverage. You lock in a price for a term of anywhere from 10 years all the way out to 40 years. The longer the term, the more expensive it is. The nice thing about term is that it's very affordable, even when your means are quite limited. You can buy substantial amounts of coverage of 10 or 20 year term for less than $20 a month. So anytime I see a GoFundMe for somebody who's died and the family's trying to raise money, I think, man, they could have gotten 100, 200, 300,000 a term life for 12 or 15 or $20 a month. So there's really no reason for most families not to have substantial coverage, assuming insurability. The problem with term is that it's temporary and most people outlive it. Most people lived a life expectancy which is well beyond the age that carriers continue issuing term coverage. As such, permanent coverage is available with a higher price tag. There are different kinds of permanent life. They're whole life, universal, index universal, and so on. And they can be used in a lot of different ways. Sometimes they're used for their main purpose, lifetime insurance coverage. No matter if I die tomorrow or at age 105, that death benefit will never run out. It'll go to my beneficiary, whether my family or charities. So it's legacy planning. It can also be structured to include living benefits. I can design it to pay early if I need long-term health care, for example. Most of the long-term care planning people do nowadays utilizes some form of hybrid permanent life insurance. Additionally, it has very unique tax advantages that make it a great accumulation tool for affluent people, and it can help insulate them from some of the bigger threats to long-term financial well-being, things like market risk and sequence of return risk and things like that. So it's often referred to as a Swiss Army knife for all of the things that it can do, but it needs to be designed and implemented efficiently and properly. So it's just really important to work with a very knowledgeable professional. Yeah, a lot of people have coverage through work, so I do get that question a lot. If I have coverage through my employer, do I still need more? And obviously it's great that a lot of employers do provide life insurance as a company benefit. It's typical to see benefits of maybe one-time salary up to $50,000. And is it enough? For a lot of people, it's not. If you've still got a few $100,000 or more on your mortgage, if you've got small kids and you want to provide for college, if you've got a family that wants to maintain their lifestyle, then $50,000, while it's a nice chunk of money, it's just not nearly enough. Some people with $1 million of coverage, it's not nearly enough. So we go into some greater detail about picking a right amount in another video, but if you have coverage through work, don't just automatically assume that you're covered. One of the real common questions that people have is, how do I know how much life insurance is enough? And some people just go the nice round number route. They pick 250, 500,000 or $1 million because it's a lot of money and it seems like it's enough. But it really does pay to be more deliberate. Really look at your human life value. What's really going to ensure that your family's going to be okay no matter what if you die, no matter what school the kids get into, they're going. No matter your mortgage or what the market does, they're going to stay in that house. They're going to live the lifestyle that they're accustomed to. You're leaving them in the best possible position so they don't have a thing to worry about financially. They can grieve and not stress about bills a month or 6 months or a year down the road. So for breadwinners, those amounts are appropriately substantial. 10 times annual income, 12 times, 15 times, because we want our families to continue moving forward. Nobody wants their family to have to move into a smaller house across town or move back in with parents. So there's more to it than just picking a nice big number out of thin air. Yeah, I do get that question sometimes. Do I need life insurance if I don't have kids, if I don't have a family, if I don't have people dependent on me? And it's a tough one, but I look at my own situation. I bought life insurance 15 years before I was married, 16 years before having a kid. And honestly, I thank God that I did, because by the time I got engaged and married and started a family, I was and remain uninsurable due to cancer history. I've dealt with melanoma a couple of times. So even though I had much more of a typical need as a family man later in life, I was much too big of a risk for the insurance companies by that time. So I had bought it in my early 20s as more of an accumulation tool. And had I not, my family today would be completely exposed. So thankfully, the policy was designed properly where I can increase it periodically without proof of good health, but it's still not enough. I mean, I wish I had 5 times more, but compared to the alternative, it's truly a godsend. So I understand that it's a stretch for people, but those who plan on getting married or plan on having a family at some point, it's really not a bad idea to get something started, even if it's just to lock in insurability. I definitely wish I had locked in a lot more. A pretty common question that I get is, how often should I review my life insurance coverage? How often should I change it? And it's certainly worth reviewing every year. Too many people set it and forget it. Sometimes they go decades without reviewing it. The big life changes are when you really want to make sure and review it, whether you get married or have kids or you get divorced or the kids become independent, things like that. There are a lot of stories out there of life insurance gone wrong simply because it wasn't reviewed regularly. People dying, for example, and their ex-spouse was still the beneficiary instead of their current spouse. It's easy to overlook details like that if we're not reviewing it on a regular basis. So I say it at least annually. So people wonder now, what's the exam process like, or what's the underwriting process like for life insurance? And underwriting really has come a long way in the past couple of years, particularly since the pandemic, just out of necessity. Carriers got a lot better at automating the underwriting process, and there are several carriers that offer exam and lab-free underwriting. In the past, they'd require a blood test and they'd send somebody out to your house to get your height and weight, and they'd ask all sorts of invasive health history questions. Nowadays, it can all be done online for those who qualify. It's getting simpler every year. Some people still need traditional underwriting because of health history, but many or most are now able to get it all done pretty quickly and easily online.